Hey guys, Alan here with eatsleeptrade.net. Welcome to my first lesson video. We're going to be looking at position sizing and risk management. One of the biggest questions, or one of the first questions traders always ask is, how much money do I need to start trading? So hopefully by the end of this video you're going to have an understanding for how much money you need to begin trading. Okay, so we're going to be looking at EKSO as an example today, and we're looking at the daily chart. So what that means is each one of these candles represents an entire day's worth of trading. Alright, we've got a red line here, which is going to represent a stop loss, which we're implementing at 123. We've got a yellow line, which is going to show the price at which we bought the stock. And we've got our green line up here, which is going to represent our limit or our goal where we think the stock is going to go. Okay, so we're looking at Fidelity's Active Trader Pro, and right over here on this window, this is called the Trade Armor, and it allows you to use a buy triggers bracket, so you could set a price at which you want the stock to buy, a price of which you want it to sell on the high end, and of course a stop where you want it to sell on the low end. So I don't really use this particularly for actually placing the trade, but it comes in handy when you get to plug in your numbers and you get to see your profit and loss. So we're watching EKSO, and we see some higher highs and we see some higher lows. Whoops, I'm sorry. We see some higher highs and some higher lows. Sorry, I said that backwards. And we're looking for a reversal on this pullback. If we get a green candle that opens up higher than the previous day's high, and to me that is a buy signal. So we went ahead and let's say we bought this stock at 141. And we've got a stop placed down here now at 123, and we've got our limit up here at 160. So back over here to the Trade Armor, you could see that we bought $50, 50 shares. And at 141 that would cost approximately $70. So right now we've got a $70 buy for 50 shares, and if we hit our upper bracket of 160, we'll make almost 13.5% or $9.50. So hey, that's pretty good. We're gonna invest $70 and we're gonna make $9.50. I like those returns, but what traders don't think about, or new traders don't think about, is the cost of trading from commission and fees. So for example, in order for me to trade, it costs me $7.95 to buy a share or $7.95 to sell a share. So you're looking at $16 cost in order for me to make one trade. Now if I were to make this trade only putting $70 down, I would have lost $6.50. So in this scenario, based off this stock in this trade plan, $70 is not enough money to trade. So you could see how that number will change based on the cost of the stock you're trading and your trade plan. So let's change this to something a little bit more realistic, like 500 shares. So now we have 500 shares and we can make $95, still at our same 13.5%. So now that we've got $95, we're profiting $79 once you subtract your commission. And so we're looking at 500 shares, which is $705. You add your commission, $16. You're looking at a $721 investment for a $79 profit. Okay, so let's go look at our stop now, and this is our risk. So risking 12% of your trade is too much. That's way too much. So we would need to move this stop somewhere up here, probably at the day's low of 135. So let's plug that in and see what we're risking off that. 4.26%. Okay, now that's acceptable. Our risk acceptance is 5% or less per trade. Also, the dollar amount, so this $30 risk should be less than 2% of your total account value. Okay, so now we've got a 13.5% gain, a 4% risk, and we've checked to make sure that $30 is going to be less than 2% of our entire account. Alright, now we're going to see how this trade played out and how we managed our stop loss and risk through the trade. So next day, you see we get a red candle here. We put a higher low, so that's always good. We put a higher high, so that's always good. So even though we didn't get a nice run up like we were hoping for 2 or 3 candles like we've seen here, or 3 or 4 candles like we've seen in the past, our trade plan or idea is not broken because we haven't hit this 135 or gone below 135. So next day you see another red candle, but it's just consolidating nicely with the previous day. Nothing to worry about too much. Basically just a neutral candle for our trade idea. Third day coming in, you could see the low comes down and test 135. We'll say we didn't get stopped out because it didn't, we could say our stop was at 135.1 and that test only came to 135.4 or something like that, for example. So let's see what happens on the next day. So it's pretty similar candle, red candle again. The low doesn't quite come to 135, just test the 136. Next day, we get another red candle consolidating within the previous day's candle. And then another red candle who has pretty much been staying right inside the same range. Our stop loss of 135 is still implemented. At this point in time, you're probably thinking, maybe I should just get out of this trade and move on to something else that seems to be a little bit more active. We had 5 day pullback. We had 5 day pullback. So we had 2 5 day pullbacks in a row. And now we're 1, 2, 3, 4, 5, 6 days in. So we're feeling like we're waiting, but we made our stop loss at 135. That was our original trade idea. So we just want to leave it there and continue on. So let's see what happens on the next day. And there we go. We get a nice green candle. So now we're recovering a little bit here and starting to see what we were hoping for. Now hopefully we can follow with another 2 or 3 days worth of green candles. So on this day here, you could choose to either move your stop loss up, maybe you want to go to 141 or anywhere in here that if you're afraid, and if you just want to move it up because you want to lock in as much profits as possible. So let's see what happens on the next day. So next day we get another red candle and it looks like it comes down and tests this 141 range. So maybe if you had moved your stop loss up to that 141, it could have stopped you out. There wasn't a whole lot of range right here. That's why I decided not to move my stop loss. So let's see what happens on the next day. And finally we get really the bigger green strong candle that we were looking for. So patience pays off. Our stop loss of 135 held up through all these consolidation days, and we made it to our next breakout. We hit our 160 limit and broke above that, so everything's looking really good. So we're going to move our stop loss up and lock in some of our profits. Now there's lots of places you can put this. You could put it at the high of this day. You could put it at the high of this day here, 157. You could put it at 160, which your limit was. You could put it at this high right here, which is the previous high we just broke above. So that's a pretty good spot. Let's put it there. We're going to put it at 164, so let's update this. And now you can see we've locked in $115 or 16%. So let's see what happens on the next day. We get another green candle, so what do? We're going to take our stop loss and we're going to move it up again. So let's say we brought it up to 176. That looks like a pretty good area. You know, we've got 3 strong days of green candles. As you can see, that's been about our max on our previous runs. Does that mean that that's the max right here and it's not going to go up more? No, not at all. We don't know how high a stock is going to go. We're just using technical analysis to make the best educated guess that we can that a stock is going to go up, but we don't really know how much it's going to go up. But what we do know is how much we're willing to let it go down. So right here, we're willing to let it go down to 176, and if it decides it wants to go up more, then we'll let it. So let's see what happens. So next day comes, and as you can see, we hit our stop. So we get stopped out at 176, and we profited 24%, which is great. We want to try to keep our profits in the 10 to 25% range, and our risk in the 5% or less. With that number or amount of each trade we're risking being less than 2% of our total account. Alright guys, that's going to wrap it up for this video. If you have any questions, please leave them in the comments below. Don't forget to like and subscribe for future videos. There's going to be more lessons, charts, and watch lists. Also, you can follow me on Twitter to see what stocks I'm watching and trading. I'll post a link below for that. And of course, don't forget to check out the website, eatsleeptrade.net. And look forward to seeing you guys in the next video. Thanks.